The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Well, good morning to you from up here at 7,000 feet. Got a nice sunny day here in Santa Fe, New Mexico. We're in the middle of what is called monsoon season. Now, I never really heard that phrase till I came here, but it's kind of interesting. You don't typically get rain until the later part of the day. Pretty dry. We're in the desert like everywhere else. We could use some rain right now. But you get rain, thunderstorms, some lightning very often in the later part of the afternoon, maybe 3 p.m. to 5 p.m., sometime in that range. Yesterday, we got some downpours, which was very nice, very unusual, nice to see that. So in any case, you know, we get rainbows. We get rainbows here, a lot of them when that occurs. I've actually never lived anywhere where I've seen so many rainbows as we get here. So hopefully that's a good sign. I'm always looking for signs and indications of good things ahead. I do believe there's good things ahead, but as you often hear from Tom and Steve and a lot of the hosts around here, we have to make these things happen. So you can look for all the rainbows you want, and sometimes that is a nice sign from the universe, but it's really up to us what we're creating here. So along those lines, you know, one of the things I do here on this show in terms of looking at the wealth creation aspect, I really don't like that word. It does sound a little bit I don't know, combative, I don't know, maybe just because wealth, even though it's a pretty neutral economic term, it really has been imbued with a lot of political overtones that are not so nice, especially in this election year. Yeah. So just in terms of our ability to use these free markets to create good lives for ourselves and our families, I do like to look at the stocks that are showing some strength, although today, I think what I'm going to do is I'm going to talk a little bit about some. I normally show you the stocks that are holding up, gaining strength above some shorter-term key moving averages, and we'll look at some of those today. Absolutely. Some of the leading stocks this morning were into the retail season. The retail section of earnings season, they seem to go in waves, right? You get the financials, then you get the retailers, and then some of the techs all kind of tend to clump together. So we're in the retail season now, and we'll talk about some of those today. But where I was going with that was I will, a little later on in the show, I'll look at some small caps from a top-performing mutual fund. And as you know, we talk about it here on the show all the time, that we do have a lot of the top-performing funds, they will sit through corrections in stocks that we as individuals don't necessarily need to. They will buy them at points perhaps lower than we need to, but that can be a very good thing for us because we can follow in their footsteps as their buying sends a stock higher. Okay, so before we kind of take a look at some of these names today, a lot going on today, a lot we can look at. Just wanted to let you know we still have up there on the homepage of TFNN.com the free report on 7 IPOs poised for more gains ahead. So you want to take a look at that. I like to look at recent IPOs. In fact, we can take a brief look at the IPO market today. Let's see, it's slowed down a little bit since a couple weeks ago, but it is August. That's kind of to be expected. So we'll take a look at that. But I like recent IPOs because they often have a lot of fresh energy in terms of the product, and the service is something that's new, that's in demand. You have a management team that is still excited about running the company, bringing in new ideas. They're in growth mode frequently. So we'll take a look at some of those today a little later on. Now, wanted to just talk a bit about earnings season. And let me put a chart up here of, actually, that's the wrong one, GRPN. Yeah, which crummy social media stock do I want to put up? And today I'm going to put up Groupon. And, what was so interesting about this, what kind of occurred to me a little bit this morning, it's, you have some companies this morning that really just have crushed their quarterly reports in terms of the views. And the media is really still fixated on Groupon. They're spending so much more time focused on Groupon today. And I was kind of thinking about that. What's going on with that? And it seems to me that one reason is because they spent so much time fixating on it back around the time it was going public. They got so excited about this, just the enthusiasm for all the hope and change that these terrific new social media companies were bringing. Yeah, I know what I said right there. And it does kind of correlate a little bit with people who maybe like to double down, on political candidates that they get very, very excited about, and then the candidates fail to deliver, but they were so excited in the initial campaign, they don't want to go back and say, well, I was wrong about this. And I think there's a little bit of that going on, some similarity with some of the social media stocks as well. I think maybe some of the original champions are still kind of hoping for some miracle here in Groupon. Now, what's interesting about that report is the company said that its costs were rising while growth was decelerating. Not what you want to see. That's not a winning formula there. It can really, again, some of these champions of some of these companies that get very emotional and get very enthusiastic about the hype that is built here. A lot of them are also the Wall Street analysts. They were upgrading the stock as recently as May. Now, in its report, the company was blaming Europe, and I guess there is some justification there. I guess some of the European merchants are receiving less when customers do redeem these coupons than some of the U.S.-based merchants. But nonetheless, it does kind of seem like a bit of a convenient excuse. And frankly, like I was saying a moment ago, Groupon was something that was driven by that cool factor. Just doesn't seem so cool anymore to be printing out a coupon for, a deal at the nail salon in the corner mini mall. It's nice to get a deal at the nail salon, I suppose. But, that's not particularly cutting edge or forward thinking. It's fairly old school. And there are plenty of other online coupon companies anyway. So, okay, let's move on here. I don't want to be one of those that's continuing to obsess upon this loser. Let's talk about a winning stock right here. And this is not getting the attention from the media today that Groupon is. And this is one I've talked about for a long, long time. The ticker, of course, is Kors, K-O-R-S, Michael Kors. And as we had our guest Ken Hoover from Investors Business Daily, when I was guest hosting for Tom last week, Ken Hoover was talking about Michael Kors, a company that he's been watching, gapped up. It smashed earnings views. Now, interestingly, this company said there was no impact from the European financial crisis. How about that? So we're seeing some good growth in this one. Yeah, I've been tracking this one for a long time. Double-digit earnings growth expected in fiscal 2013 and fiscal 2014. We're seeing strong year-over-year revenue growth. So just a lot to like about this particular company. Now, this is one of those instances, I talk about this a lot. You want to be careful about chasing a stock like this on a gap up. you already see it's reversing some of those gains intraday. And that's another reason, by the way, that I really don't like to buy stock when you see it in the early phases, in the early hours of trading, when it does make this big gap up. And then it's very, very normal to see some investors and traders who decide to take some profits who had bought in at an earlier time. So it's really, I prefer to wait for the later part of the day to enter into a position if I'm going to at all, because already you see it pulling back intraday. What you might want to do, one of the examples that I like to use, and I'll put this up here on the screen, I've talked about this before, is you see here lumber liquidators that gapped up and is now consolidating. Now this one is pretty nicely in a buy zone at the moment, so not something that you would have wanted to chase higher. It's actually, let's see, a little bit below that prior high of 44.07, so really liking what this is doing. Watch for Michael Kors to potentially do something similar, although a difference with Kors as compared to lumber liquidators. Actually, let's see here. Looks like it's trading below that prior high. Yeah, went up to an intraday high of 49.12 today. So kind of hitting resistance in that same area where it's been hitting resistance regularly. I'm going to put this up here on a weekly chart so you can see what I'm talking about. So it hit resistance just above $50 over here, just below $50 over here, and again, just below $50 today. So it continues to hit resistance right about in that same area. So, you know, it'll be interesting to see what happens here, whether it kind of pulls back into a little consolidation before it rallies higher, or whether it can crack that $50 mark definitively. Either way will be interesting, and you also want to potentially see what it does intraday today, how it continues to act. For more aggressive traders, it could offer a buy opportunity today if it does continue to pull back a little bit, but I would also be comfortable waiting to see how it acts going forward. Okay, so let's see here. I've got about another minute in this particular segment. Let's take a look. I'm going to talk a little bit more about some of these retailers because it's so interesting because, you know, obviously there is a lot of bad news in the economy. Companies are not hiring, and I have my views on why that is, and I think there's a lot of people have their various views on why that could be. Uncertainty. We'll leave it at that, the uncertainty picture. Now, let's look at a Dow component. This is the small cap show, but I do look at other market cap stocks because it is all relevant. I look at the small caps and even the micro caps in the context of the broader market, not in a vacuum. You really do have to see, for example, how the Dow components are doing. So we had Home Depot that also is doing very well today after reporting. And, you know, again, you have to kind of wonder what's going on here. Is this one of these housing-related plays? We've had a few of those. We'll look at a couple others after this break. Give a call, 877-927-6648. I'm Kate Stalter. This is the Small Cap Roundup.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhoads, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhoads, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhoads, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by Bactec Environmental. For more information, just click the Bactec banner on the front page of TFNN.com.
All right, welcome back. Just going to take a little further look at some of the retail names that reported. You know, we've got Home Depot there, so that's looking pretty nice. You've got a Dow component retailer, and there's a couple other well-known retailers in the Dow, and Walmart obviously not reporting today. But, yeah, that's holding up very nicely as well. You know, interesting to see how this did really not get affected by that bribery scandal down in Mexico. You know, a lot of times when there's some kind of scandal with a company, particularly I think it seems to have to do with accounting, where there's some kind of questions about accounting practices. That seems to really hurt a stock. This thing didn't. That did not hurt it at all. I know there's a lot of Walmart haters out there, and maybe people in the media who might like to see this particular company fail. But, you know, let's face it. It's hard to look at something like Michael Kors and Walmart in the same breath and keep a straight face. Because, you know, what's the saying? Never the twain shall meet. Totally different customer bases there. Both are doing well, though, and that tells you something. You know, but my point about Walmart is, for all the haters, there's a Walmart right down the street from me, as I was talking about earlier, and as Tom mentioned, I'm out here in New Mexico. I live in kind of a suburban little subdevelopment here, but there's a whole lot of very rural countryside right, just nearby here. And a lot of poverty out there. And you get a lot of these very poor people, many of them tribal, who come in from the countryside and shop there. And hello, where do the Walmart haters expect that these folks are going to get their groceries and their clothes? Come on. It's a place for a lot of these folks who don't have anywhere else to shop to get the necessities of life. So, I'm reminded of that every time I go into that store, quite frankly. So anyway, we're seeing the stock is rallying to, it's pulling back a little bit from highs, but holding up very nicely here. I want to move on, take a look at some other kind of retail-related sectors. Now, here's one. It's not a retailer per se, but it is in the cosmetics and accessories area. Elizabeth Arden. I talked about this last week on Tom's show. This one rallied higher on earnings. I have a friend of mine who's a trader who has made the joke, and he said it a little more crudely than I will on here, but he made the joke. He said, if it's something women can wear, put on their bodies, it's a good stock. And you know what? Historically, he's had a pretty good track record on that. He made that joke back in the days when Lululemon was a big leader, and I realize that one is consolidating right now. And Ulta Salons was another one. Actually, Ulta, let's take a look at this. Ulta, I see, is getting a nice move up today as well. This is a mid-cap. Ulta has been a pretty good performer, and this is actually nice consolidation. Let me put this back on a daily chart for you right here. So you can see that it's getting support above that 200-day line, getting a nice move up today. I'm not discouraged by this sort of thing. The 200-day, obviously, you would have wanted to get out of this thing by now if this was something you were holding as more of a swing trade, not as some kind of buy and hold investment. But I do like that 200-day moving average support. Now, there's one more from this kind of cosmetics category that is getting a big move up on earnings today, and this is Estee Lauder. Now, this one also reported, it's interesting because you've got Michael Kors, Estee Lauder, okay, and Home Depot. That kind of ruins my little thesis there. Home Depot doing so well today, but where these stores that are appealing to females. I mean, heck, I know if you've got to have makeup or clothing for a particular event, you're going to do it. You have to do it. Some of the get out of debt, don't spend any money folks aside. Now, I'm just kind of looking here at what I'm seeing in the fundamentals on Estee Lauder. Seeing double-digit earnings growth expected in 2012 and 2013. One thing I don't really like is there's been a bit of a revenue deceleration and an earnings growth deceleration, but we did have a good outlook on this, and I'm liking the consolidation. I'm going to just put this quickly here at a weekly for you. I know we got to get out of here, but there we go. We can see nice support there above that 50-day. Actually, no, that's not the 50-day. That's a weekly. Some good support there. All right, we're going to come back and look at some recent IPOs after these messages.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. NADEX, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, NADEX allows you to trade directly through them with direct market access when using their trading platform. NADEX never charges a fee to use their platform, which even includes real-time charts and full customization capability. NADEX's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. NADEX's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the NADEX banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right. Welcome in. Let's see here. We have the European close, and we've got the indices have closed higher, and then we also, well, most of them, the euro just down fractionally here. So we'll see. Sometimes, as I've mentioned in the past couple shows, we sometimes see the money coming into the U.S. stocks when Europe closes. So, it's just the traders who like to move money around the world. When they are done with Europe, they'll come over here. So you sometimes see a little bit of a volume pickup when that happens. That's another reason why I kind of like to wait to make a purchase until later in the session, just when you have a little less of that early morning exuberance and distraction that can go on with some of the trades. So I like to wait a little bit till some of these settle down. Okay, so let's see here. I want to put up a chart here. I want to take a look at some recent IPOs. Now, this is one, and they look kind of funny when you put them up there on a daily chart, if they're on a weekly chart, rather. So there you have it on a daily. So this is, let's see, the ticker here, FMT, Performant Financial. I always have trouble with this company name, Performant Financial. This is a loan collector, debt collector. Yeah, they collect delinquent and defaulted loans for the Department of Education and Medicare. All right, one of those that everybody loves to hate. Let's see, it got a bounce on the first day of its IPO, and you see where it's trading right now, right at around $10.11. Hang on one second here. I just want to pull up on my other screen a couple of the fundamentals, if I can, over here. So, this is a small company, $450 million. It's so far, it obviously, you can't gather anything from the trading volume because the IPO volume is going to be huge. So you're not going to be able to get anything from that. Good history of revenue growth here. So you've got some of these government agencies and government agencies who are paying this company to collect on the debt. So that's an interesting company. They're based in California. Way too soon to say really anything about how this one might be trading. So let's see. Yeah, and I'm getting a note here. All the shares are out on this stock. Yeah, this is one of these. Obviously, it's not something you even want to think about. Give it a little time. This needs some time. When something is only a few days public, I want to add for folks maybe who have not listened to this show too often, not something I am even remotely suggesting you consider getting into. You really need to have it establish its trading pattern. Oh, I see the question. Let me come back to the Tiger Den here. Are all the shares out? No. I mean, would there be shares available to retail traders if you wanted to buy a small position in this stock? Of course there would. Let me see here. The market cap, 425 million. Shares in float, about 15 million. Shares outstanding, 45 million. So, there's some of the numbers on that one. I got to be honest with you. That's actually, I'm kind of just reading off the numbers, because when you're talking about an individual trader and looking at entering a small position in some kind of, newer name like this, or even anything that's not a penny stock, anything that's thinly traded, for example, there's always going to be enough shares for a retail investor to get in. Now, the problem you might have in trading this, which is why I like to be careful on the thinner stocks, okay, is the problem you might run into is the fact that if there is very sparse institutional ownership, all it would take would be for one big holder to get out of the stock for whatever reason. There doesn't even have to be a rational reason. There doesn't have to be news. Somebody just has to decide that they want out. You can get shaken out of this thing in a heartbeat. So that's my concern on the thinly traded stocks. Once again, way too soon to really know much about what the average trading volume on this one is going to be, how liquid this is going to be, because we're just still looking at that huge IPO volume on this one. And it has not established its character of trading either, having been on the market. Let's see, this IPO'd on Friday. Yeah, so you don't want to be getting into this one at this juncture. So, okay, let's see. Let me take a look at a couple others we've got here. So that went last week. We've got a few that are expected. There's one more here that we can take a look at. And, oh yeah, right, this one here, of course. This is, talk about the hype. I was talking about a little bit of hype earlier. And we've got Manchester United that also went on Friday, and of course Performant Financial kind of got buried in all the news about Manchester United. Let's see here. Went public at 14. It's now trading, right around 14, 15, 14, 17 right now. This was one of those that was so high profile. You did have the situation last week where you did see some of the investment bankers, similar to what we saw with Facebook, where the investment bankers were trying to prop up the shares above the offer level at the day of the IPO. It went public at 14. It never dropped below 14. So what does that tell you? You know, that tells you they were in there propping up the shares. So we'll see. Just, you know, this is to me, I'm a little less than impressed. Let me just pull up some of the fundamentals here on Manu. Yeah, you know, it's had reported, let's see, slowing revenue growth in the most recent quarter, slower earnings growth in the most recent quarter. It's a famous stock. It's got the glam factor. You know, it went public right at the tail end of the Olympics when you had people around the world watching some of the football matches that were going on. Yeah, we're here in the United States. We're going to call it soccer. So this is, again, it obviously doesn't have the Facebook hype, but something, a distant cousin of that. So you have market cap of $2.3 billion. You have you've got the huge IPO volume, so you really can't tell anything about this one yet either. You've got to give this one time, the same as with Performant. You know, and again, don't forget, the issue with something like a Performant that you never heard of, that the news of which gets buried on a day that Manchester United goes public, you know, a lot of these smaller names you never heard of can frequently be some of these stealth winners. And that's, again, in my never-ending quest to kind of ferret out some of the hype in the market, is where I enjoy kind of making some of these comparisons. Now, we've got another stock that is on the docket to go public this week, and I don't have a chart for it because it's not public yet, pre-IPO. It's High Crush Partners. It is supposed to go public under the ticker HCLP, and this is a fracking related company from the energy sector, produces frac sands used in recovering hydrocarbons from oil and natural gas wells. Okay? Pretty interesting. It's a Houston-based company. They plan to raise $225 million, offering 11.3 million shares priced between 19 and 21. That would give the company an overall market value of $546 million at the mid-range. Okay. It is based in Houston, plans to list on the NYSE. So that's due to go public this week. We'll see. Not uncommon to see companies pulling back. However, you know, we've got the market in a rally right now. Conditions are pretty good. This is an energy company that had $55 million in sales over the last 12 months. Not something that's, you know, one of these speculative kind of tech names. There's a whole lot more substance to this one. The underwriters are Barclays, Morgan Stanley, Credit Suisse, and UBS. So you've got some, you've got some reason to believe that this one probably will go. And just taking a look here at what else is in the pipeline, we have a couple Safety Clean. So that's kind of interesting. And again, no chart on this one because it's pre-IPO. This is a company that recycles used oil and parts, and this one wants to raise $400 million in an IPO. They attempted to do an IPO in 2008, postponed it due to market conditions. Okay, that was very common back then. We see that a lot. Who knows, by the time that this one is getting done out there talking to the investment bankers, trying to drum up some interest, what the market conditions will be. You never know these days. This one booked $1.4 billion in sales for the 12 months ending in April. They plan to list on the NYSE under the ticker SK. So this is another interesting one. Could be a small cap. So we don't know yet about the pricing on that one. A little bit early. Now here's another interesting one that would be kind of a spin-off from Pfizer, which would be Pfizer's animal healthcare unit. Now, this has been discussed for quite some time. I've been hearing this in the news for a while, that Pfizer was planning to do this. They did file on Monday with the SEC to raise up to $100 million in an initial public offering for Zoltis, which is the name of the animal healthcare unit over there at Pfizer. And let's see, Pfizer will retain a significant ownership stake, about 20%. So this will have a market value, obviously, of higher than $100 million in that case. And let's see, we've got J.P. Morgan, B of A, Merrill Lynch, Morgan Stanley as underwriters. And no word yet on the exchange, but I would guess it would probably be on the NYSE. I would just guess about that. So anyway, that's what you might have coming up. There's a few names there in the pipeline to take a look at in terms of, so you might have High Crush this week, and then down the road Safety Clean and the Pfizer Animal Healthcare Unit, Zoltis, I'm not sure how you pronounce it, Zoetis is how you pronounce that, or how you spell that. Okay, let's take a look. I was looking this morning for some work I was doing over at moneyshow.com, just taking a look at some small cap holdings in a top performing mutual fund. You've got the Alliance Bernstein Small Cap Growth Fund. The ticker is QUAKX. Kind of funny, QuackX. Let me just see if I can get that for you. No, didn't work. So I'm going to just go back here to the CoStar Group, which is one of the stocks that is held there that I was taking a look at, and I hope you can see the chart up there. CSGP is the ticker that we are taking a look at right now. CSGP, the CoStar Group. Now, this is interesting because it's classified as an industrial, but it really is, it's a company that provides real estate information to brokers, to banks, to government agencies. So for some reason, under the S&P classifications, it's called an industrial. Now, this one, if you take a look, I've got it up there for you on a daily chart, so you can see very nice support above that 50-day moving average. It's also holding nicely above that 5-day line right there. Okay, so this one is potentially in a buy zone right now. It's another one that's kind of been hitting some resistance between 85 and 86. So you can see very clearly right here on the chart, it's had some trouble overcoming some of that. This little consolidation here, it's wedging upwards in a slightly. I know some analysts don't really like to see that. You're also seeing some lighter volume in recent weeks, both to the upside and the downside. It's been tapering off. So really, that to me looks like a good sign of institutional investors who are holding shares at this particular level, and that could signal some conviction about this stock. Now, looking at some double-digit earnings growth over the next couple of years, 20% earnings growth expected in 2012, 54% in 2013. So there is some reason to be pretty optimistic about this one. It's pretty volatile, though. Beta of 1.3 tells you it's more volatile compared to the general market. So that is our music there telling us this segment is over. We'll come back, take a look at a couple more small caps. I'm Kate Stalter. This is the Small Cap Roundup.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday, Wednesday, and Friday at 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question, are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhoads, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhoads, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this. Today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right. Welcome back. Last segment of today's Small Cap Roundup. It just always goes by super fast. I'm just doing a little scan here to see what we've got coming out after the close today, what earnings reports we have to look at here. Well, you've got JDS Uniphase that sometimes gets some attention, but not necessarily a stock that I have been tracking. Let me show you a couple others that I was looking at here in terms of some of these holdings of this Alliance Bernstein Small Cap Growth Fund. Now, here's an interesting name, and I got to admit, I did not know about this one. Oops, typing it in the wrong box there. There we go. Got so many little windows and screens open here. This is a company called True Blue, TBI. And let's see here. There we go. So this is on a weekly chart for you. Now, this is one that is it's a Tacoma, Washington company. It specializes in blue-collar job placement. So this is one that's a holding of that fund. And it's, let me see here, I want to go over here and just take a look at some of the earnings. So you've got some pretty good accelerating, actually, let me take a look here. I've got my wrong screen going on up here. We have some little bit of a deceleration in revenue growth, but a little bit of a deceleration in earnings growth too. But that's one that I was taking a look at this morning. I do like the support kind of near that 200-day line, but you want to see some more bullish action when it comes to some of these shorter-term moving averages. The shorter-term lines are pretty good, but you've got the 200-day above the 50-day, so not what you want to see at this juncture. So let me just, I wanted to show you that particular stock. There are some that are sometimes a little bit out of what I normally look at, but can be some of these longer-term watch list names. You've got 22% earnings growth expected in 2012, 20% growth in 2013. So this is one of these stealth names, and this is kind of why I like to look at what the funds are buying and holding, because it can give you some clues into some names you might not hear about in the media all the time, right, on the financial TV channels. Okay, just want to remind you a little bit, we're winding down the show today. Now, after I get done here, you want to stick around. You've got the Options Hour with Victor Jones, just terrific explanations he gives and trading ideas, and just a wonderful show he does there. Daryl Martin with the Diagnostics Trading Hour. And then, of course, David White with Power Trading. You've got Ken Shreve with Breakout Investing, my former colleague and friend Ken Shreve. Then, of course, you've got the Tom O'Brien Show later in the day. So you definitely want to be sticking around and getting all these different trading ideas from all the TFNN hosts. I also want to remind everybody, make sure you go to the homepage, tfnn.com. You've got the special report that I put up there last week on 7 recent IPOs. Love to look at these IPOs, and you can get some very good ideas. There's some on there that are showing some nice moves these days, so you want to make sure you take a look at that. You've got these newer companies that have some good energy, and once they get past these, initial lockups, the expirations on those, once they establish a trading pattern, maybe it can be after a year or so. You might have to wait a while. And that's fine. You don't want to jump in too early. These can give you good opportunities. Also, don't forget, we have our Low Price Leaders newsletter. And that is also, you can take a free trial to that on the homepage, tfnn.com. You want to lock that in at the introductory rate before it goes up. All right, it's been another great show. Thanks so much for joining me today. I will be back with you again on Thursday with another edition of the Small Cap Roundup.